Hello and welcome into the KE Report. I'm your host, Shad Markwitz, and today we're getting an update from Erik Wetterling, also known as the Hedgeless Horseman. And we'll put a link to the hedgelesshorseman.com down below so you can follow along with Erik's work. Erik, we got a couple companies to talk about today that have news flow out that has caught your attention. First is a company we have talked about before, a company we brought on the show. That's Goliath Resources. They got a banger of a drill hole out today, though, that they released on the 13th here to the market. Headline hole assaying 34.5 grams per ton gold equivalent over 39 meters, including a section that has basically 133 grams per ton gold equivalent over 10 meters. So really high grade over a long width. Recently, they took a little flack for having high grade over a more narrow width, but this should expand people's thinking on the topic. This is in their Surebet area in the Golden Triangle, British Columbia. When you see a hole like this and a pop by over 20% by the market, after the reaction we saw on the last set of drill results, what are some of the key takeaways you have about Goliath?
I think it's very telling how it reacted on the last news release and how it reacted to this news release. I saw people saying they're selling, and we obviously saw selling on the last news release. And it's like those holes were pretty good to begin with. But again, I think there are a lot of catalyst hunters, especially in a very drill-heavy play like this. So you probably had people say, okay, I'm going to make money on the next news release, on the next assays. It comes out. Maybe there's a lot of pent-up selling, and it wasn't like spectacular, so there wasn't really a, let's say, shock. It sold off, and then immediately the sentiment gets colored by that, obviously. Like those 5 holes had, if you think those 5 holes had a 10% change in the intrinsic value of Goliath Resources, then I don't know what you're smoking. But that's the market for you. That's how it works. And then, so we go from a bit subdued sentiment in the short term, and then they come out with these assets like this, and all of a sudden it's up 20%. I think it just goes to show that, in my opinion, you can almost not make a good case if it's a short-term case. It's not like, even in a world-class systems, for example, it's not like every single hole is going to be good or every single hole is going to be bad. It's at the end of the day, it's kind of, the bigger picture, the average, whatever. It's like we talked about this before even the first assays from this drill campaign came out. It's like, okay, there's about 100 holes that are going to be assayed. I could make a case that I think that the view of Goliath, I expect it to be better after those 100 holes are out than it is today, before those 100 holes are out. And in the meantime, or along the way, we're going to have like now great holes, and before that good holes. Maybe the next 5 holes will be, whatever, quote, underwhelming or something, and then we will have great holes again. So it's like it's almost impossible to guess where the market is going to take, the share price on any given news release, because you don't know exactly what the next news release is going to say, and you don't know what expectations are embedded going up to that news release. How many are just waiting to sell? How many are waiting to buy if they see something that's like whatever, they have some threshold, I'm going to buy if they show that it had an ounce per ton over 5 meters, whatever. It's impossible to know. So it's like Schrodinger's cat within Schrodinger's cat. So it's like short term, I think it's extremely hard again to make a case even on a exploration story I really like Goliath. But the bigger picture is that they have a bunch of zones. They're all wide open. They're getting great results, and they have way more pre-discovery or early stage targets in addition to this. So it's like I have no idea where the blue sky is for Goliath. I just know that the story has kept on getting better, and with, for example, the discovery of the Bonanza Zone, which is obviously delivering.
Well, and I think it's also interesting that we see a lot of companies do a small program, 3,000 meters, 5,000 meters, then they got to raise money again. Then they do another 3,000 or 1,800 meters or 5,000 meters, then they got to raise money again. In this case, Goliath was criticized for raising so much money earlier in the year, but they also have all of this funded from the year of 2024 and a good chunk of 2025 to kick things off already pre-funded. So there's not that financing overhang. And yet there's all these other assays still to report, not just from the Surebet and Bonanza sheared area, but also Jackpot and Treasure Island and some other areas that they've drilled separately. Then they also relogged a bunch of old holes realizing that they hadn't looked for the reduced intrusion part of this, which is similar to snowline gold. So they're relogging a bunch of old holes and stuff to put those out. And that's cheap work, but it could be interesting catalyst. So, when you look at Goliath, I mean, at least the way I look at it, Erik, is that I see a lot of catalysts coming up without a financing overhang. Does that play into your thesis at all to hold through all the news?
Absolutely. And I think we went through that as well when we did that pre-assay season episode. That's like, as you said, most of the time you have a company raising a small amount. So it's like, okay, they can, let's say, put out 5 to 10 holes or something. And everyone knows that's like, okay, after they put out those 5 to 10 holes, they need to finance again to produce any more assay results. So the market, after the results are out, everybody's going to look at the very next news release, which the market typically does. And if they see that it's a financing, which everybody considers to be the worst thing in the world, there's no price that's too low in a sense. So if you don't have like good backers or good access to capital or whatever, that can really weigh on the stock. Because, I mean, let's face it, even if you like the story and it's like, oh, I'm going to buy into the placement, I might as well sell now and hope I get at least a half warrant. And of course, then I would want the placement to be as low as possible. And if I know I can buy back in, there's no real risk in selling. If you think they have to go to you for a financing, for example. So to be in this case where it's like the market can digest the news releases, the assay results, and also they know that's like, hey, the next news release is not going to be a financing. So you don't really have that. So that can take place after, let's say, all the 100 assays are out, for example, if they don't raise before that. But it gives the company or the market, it gets time to digest and actually price these news releases based on their own merit, kind of, without being colored by some other, the next news release, which in that case would be a financing. So, I mean, it's a luxury thing, of course, because most juniors can't raise this amount of money. And it goes to show, how much interest there is for a project like this. And I think, yes, simply they're in a very good position right now. And there's like, 89 holes, I think, assays still pending. So 85% of all the assays are yet to come out. So that's a long runway where nobody can sell prematurely, just, assuming, the next news release is going to be a financing. So I don't care what the actual news has been because I'm looking at getting into a placement. So it's like, it might create some kind of FOMO. I mean, I'm kind of waiting for maybe this trading range to break because I think there is potential for Goliath to be a really, really standout project out there, a standout discovery out there. And there's not, basically that it's one of few that are at the very top. And in that case, I think it could go much higher.
Yeah, it's definitely an interesting story. And there's going to be some time to let the news run and just let the assays keep coming in. Not just from Surebet and Bonanza, but from Treasure Island, from that jackpot zone, from all the other relogging. So there's a lot of catalyst on tap and shouldn't be a financing on tap in the near future because, again, they're already funded for the beginning of 2025. So we'll keep following along. We'll try to get Roger on the show and get an update on this hole. But an impressive hole, hard not to be impressed with those kind of grades and widths. So we'll keep following along with Goliath here at the KE Report. But another company we brought on the show and a company you and I both talked to and are both also invested in is Amex Exploration. It's traded on the TSXV under the ticker AMX. And they put out some news on January the 9th that they've expanded multiple gold zones at the Perron Gold Project. So this is one where they put out a resource last year and the stock just got hammered to the downside. I think it sold off by like 60% because people had higher expectations in their mind. But then they put out a preliminary economic assessment at the end of last year and showed, well, not all ounces are created equal, but the ounces we got are going to create a mine because these are very economic ounces. And now they've showed the expansion of the project and how it can keep growing. What are some of the key takeaways you have here on Amex Exploration?
Right. I mean, as you said, we have talked about this before. We talked about it after the MRE was put out. And I mean, at least I think you as well have been, were following Amex because they put out some of the sector's best assay results. But it always felt like, okay, I mean, they're getting credit for it. It's like everybody knows it's a, high quality project. So it didn't feel like there was an obvious price to value disconnect in a sense, because it was kind of a, market darling, and for good reason. And then the MRE came, and it's like the stock got cut in half. And then it's like, okay, now we have a completely different case in a sense. I mean, most people obviously just look at whatever price, and it's like, okay, the MRE came in below expectation, it sold off, so now it's a sell. But it's like, well, all of a sudden it's like, hey, with a 50% haircut, and then now with the PEA being out, it's like, to quote Victor Cantor, it's like, now I know I have a mine. And then the question becomes, how much bigger can it get? And the January news release, I mean, it obviously shows it's like 1, 2, 3, 4, 5, 6 zones here, and they're hitting gold. And they also say in the news release that the discovery of visible gold in regional drill hole PEX 24197 is especially exciting. This is the first time we have found visible gold mineralization outside of the Beaupre block to the west in the basalt. This further demonstrates that the gold mineralization at Perron extends beyond the Beaupre block, highlighting the entire property as having fertile targets for hosting gold mineralization. So it's like, if we just look at the bird in the hand, it's a 1 million ounce PEA project. The economics look very robust, very low capex. Not a huge project, but that's the thing. It's like, okay, if we have this as a base, I mean, okay, it's probably going to grow, maybe significantly larger from where we are right now. So I kind of look at the exploration potential as some kind of, free optionality in a sense, because this looks like it's already worth being built. I think it's in an area and a jurisdiction, etc., where it's probably going to be able to get built. The capex is low enough that it's like not a big threshold on that department either. And as we see, and you can look in the presentation, I mean, they're having gold hits all over the place. So I expect this to grow. And I think it's pretty cheap already, just based on the current bird in the hand. And they obviously have a lot of birds out in the bush, which this latest news release showed. It's like, yes, there's gold in those birds in the bush. They have gold in them. So I like the risk reward in this, where it's like I consider the downside risk to be pretty low given the current PEA and the location, jurisdiction, all that. And I think there's potentially quite considerable upside. I mean, imagine this goes to 2 to 3 million ounces. Then it's already a pretty remarkable and rare project out there. And I think that it would be highly sought after if they can get there and they're not bought out before.
Well, and you bring up an interesting point that it's likely that with all the growth that they're showing the potential here, and they even note in the press release that based on the way that their resource was modeled, they had to change a few of the way they were drilling, because there were some certain areas that had been sterilized that won't be, that they know they have mineralization that'll be brought in. But there's some other points in this press release on the 9th that they're talking about cutoff of 1.5 grams per ton and the average mining width 3.7 meters. But they're saying that a lot of, with the exception of the JT zone where they're bulk mining, that a lot of these high grade areas actually have metal factors above the PEA threshold, which means they're hitting higher grades over bigger widths than what they were planning for in the PEA. And they're also showing that the mineralization extends outside of this big mineralized block that they knew about. And they're now finding visible gold, where you can't get too jacked up on visible gold, but there's something there at least. But that they're finding higher grades outside of the area. So when the market has sold off a stock like Amex, and it really hasn't recovered since that big sell down from the maiden resource, but they put out a good economic study. Now they're putting out news showing, hey, we're finding golden birds in the bush everywhere, as you mentioned, and some of these things are higher grade, bigger widths, and the mineralization is actually extending outside of the area that we knew about. Do you see that as a value arbitrage? Because the market doesn't seem to be awake to that yet, but yet you can see progress being made by the company. Or do you think the sentiment's so tough on a story like this that no news is going to move the market?
Right. I mean, that's the thing, because it doesn't really make, from a rational standpoint, I mean, the MRE comes out minus 50%. Okay. And then it's kind of flatlined since then. And it's like, okay, does that make totally sense? No, I don't think so. I actually think that this is the stuff we're supposed, especially if you're a stock picker, try to take advantage of. It's like, I think it was an overreaction. And I also think that subdued the expectations. And kind of going back to, what happened with Goliath, it's like, okay, it sells off on, pretty good news. And it goes up a lot on great news. So I think the sentiment has been reset, and I think that I don't know when the market will really start to care, or let's say see it the way I see Amex, for example. But it's like if they keep hitting, it's like that's going to show up in, I like to say the most important information in a news release is what it says about the next 10 news releases or 20 or whatever. It's like a discovery hole in itself doesn't mean they have a mine, but it's the start of potentially having a mine. That's why companies can go up so much on just one hole. It's what it says about, potential for the next coming years. So I think, with this news release, they're showing that there's potential. The more they drill, the more gold they're going to find, and the progress is going to get better. So I think they have a good margin of safety, a good base here. And if they just keep drilling, and I think Quebec drilling is pretty cheap, I think it's just going to increase the value, and that's going to one day show up. The CEO has said that he might put out a new MRE and a new PEA this year. So, if we fast forward to that time, they wouldn't do it if they don't think the MRE is going to get bigger, or that the economics are going to get better with the bigger MRE. So it's like if we fast forward, let's say they put out a resource of, I don't know, 2.5 million ounces or something like that. And it's like the PA is 50% better or something than PV. Is it going to be trading at, around this price at that point in time? I think the risk would be to the upside.
Yeah, it's going to be interesting to see how things develop as far as expanding the resource, updating the economics, possibly later in the year, or at least by the beginning of next year, as another big milestone and catalyst for the company. And as they put out more drilling, hopefully we'll get Victor back on the show again and get an update on Amex. One other company, we're kind of stepping up the development chain here. We went from a drill play to a early stage developer, late stage advanced explorer. We got one more company, Osisko Development, that's really more in the full-on developer category, looking to get the capital together to fund and build their project in British Columbia. Now, when you look at Osisko Development, traded on the TSXV under the ticker ODV, a lot more advanced, a 12-year mine life. They're looking at doing, I think, 225,000 ounces of gold production per year. They've got some key permits. But when you look at a story like this, you were just mentioning that it has your attention as a quality project that could be of interest to the big boys. How are you looking at Osisko Development?
I think it's a very interesting HODL case. It's a standout in the sense that they actually pretty much have all their permits as of, as recently as December, basically. So it's okay, this is a multi-million ounce deposit. How many multi-million ounce deposits in Canada are permitted? That's not a lot, not in the hands of juniors at least. It's a bit unconventional in the sense that the mineralization shows up in high-grade veins, but they plan to do bulk mining. And I've listened to quite a few interviews by Sean Rusin where he talks about bulk underground bulk mining is the way of the future, because like long hole open stoping, for example, cuts down the cost so much. So it's like the diluted grade is the bulk grade, so it's much lower than what they typically hit, let's say, in the high grade veins. So they're doing a bulk sample, and I see that's kind of a proof of concept, because again, I see it as a bit unconventional that you have a lot of, let's say, high grade veins and you're just going to bulk mine it instead of doing narrow vein mining, which we know can be very, very difficult. So it's like these guys, I think they know what they're doing. They have at least two multi-billion-dollar success stories in the gold space from before. I think they have good access to capital because Osisko Gold Royalties is a major shareholder. They have like 130 million in the bank, 25 million US in debt, and they have some other projects as well. But it's like, if I just looked at this and it's like, okay, let's fast forward 3 years. I pay, 300 million, 200 million in enterprise value. Let's say they execute and get phase one up and running, and they become like a 200,000 per ounce producer, and they can produce it profitably. By that time, I would expect them to have proved that, hey, this system goes a lot deeper. I think they've hit down to 1 kilometer depth, and I think the average resource depth is like 350 meters or so. So obvious growth potential at depth and along strike, and they have 2,000 square kilometers of land. So it's like this could theoretically be a camp. So, I'm not saying that's exactly going to happen, but imagine that happens. And if that happens, they prove they can mine this successfully. They get up to, let's say, 200,000 ounces per year. And they also show that, hey, there's probably like 10 million ounces here, and they're starting to, ramp up to producing, let's say, 500,000 ounces per year. It's like, what's the market cap going to be at that point in time if, let's say, the margins or the real price of gold is at least in the same vicinity as it is now? Well, I could see it being traded quite a bit higher if it's not bought out by then. So I just think is it high risk? I don't know. I mean, again, these guys are good at what they do. I guess, they're kind of also famous for, heavy dilution, but there's a lot of sunk costs in this. Apparently, they've drilled already 800,000 meters, which they don't have to redo, obviously. So I think that it's, relatively, let's say, low risk with good long-term potential. And it's like I could make a case for like, okay, you buy it, come back in 3-5 years. I mean, the management is competent, they have good backing, so I wouldn't expect to get shafted in a sense. And again, if the case works out, I can see it being valued at quite a bit higher than this, even including dilution.
Okay, so you're kind of looking at it as they have the kicker of ramping up production from phase 1 to phase 2, the ability to find more ounces, the ability to possibly have a bigger throughput, maybe even a bigger production profile. They're a competent team that's built mines already, but they've also had some of their projects taken over by the majors. In fact, 2 prior projects taken over by majors, so they could be a takeover candidate. And you just think that it's a good value proposition for holding the next couple of years and watching it possibly expand in market cap and expand in valuation. So definitely a story that people can dig into a little bit further and their own due diligence, but it looks like a quality project, quality jurisdiction. It's got the permits, which is unusual. A lot of developers are hung up waiting on permits, so that's another big arrow in their quiver, I should say. And so we'll keep following along with all 3 companies, so Osisko Development, Amex Exploration, and Goliath Resources. Appreciate you, Erik, breaking down the ones that you have on your radar for this week, and looking forward to talking again next week.
Thanks, Chad. The same. And I own all 3 companies. Goliath and Amex are sponsors, so consider me biased and twice biased. Yeah.